Welcome to Real Vision. It's Monday, November 16, 2020, just after market close in New York. This is the Real Vision Daily Briefing. I'm Ash Bennington, joined shortly by our managing editor, Ed Harrison. But first, with the day's stories, Jack Farley.
Thanks, Ash. Stocks surged higher on the news of Moderna's successful vaccine trial, with the Dow and the S&P 500 hitting all-time highs. The high flyers of the day were almost all stocks who are banking on a successful reopening. Your cruise liners, your oilfield services, your commercial real estate plays. The airlines were up as were the hapless movie theaters, the railroads, and of course the oil drillers. One thing we're not seeing is a significant sell-off from tech. As I'm recording this, Microsoft and Google are holding firm. Apple's actually up, Netflix is barely down a point, and Zoom, the ultimate leveraged play on the stay-at-home economy, is down only 3.5%. Actually, the only sector within the S&P that's down is pharmaceuticals, funny enough, with Pfizer taking a hit as it appears that Moderna's vaccine doesn't need the deep freeze technology that Pfizer's does. Meanwhile, the VIX cash actually increased, flirting with the 24 level. It's quite rare, as you know, for the VIX to rise with equities. In fact, we did see that in late August, early September, right before we had those jitters in US equities. In other news, IBM announced today that they'll buy IT services company Truqua. This is actually remarkable timing because in today's interview, Jim Chanos talks to Mike Green about IBM and its history of making dubious acquisitions. Here's what Jim had to say.
When IBM decided to buy Red Hat for $34 billion in debt, to jumpstart their cloud business, we decided to take another look. Stock was trading around 140, 150. And what we saw kind of shocked us.
That Chanos interview today is actually the first in our series called Paradigm Shift, Investment Ideas for a World in Flux. I'll include a link in the description. So today was Jim Chanos and Mike Green. Tomorrow, Raul's going to be speaking to Hugh Hendry. They're going to be talking about the dollar, gold, Bitcoin, and actually negative rates. I actually just watched the interview. There's a great moment where Hugh says, negative 50 basis points? Really? European Central Bank? I'm not impressed. So I did not do it justice to Hugh, but it's a great moment. We're going to be running this interview series, this journey of discovery throughout the entire year. So we're going to be speaking to Sam Zell, Chamath Palihapitiya, Jim Grant, Jeremy Grantham, Kyle Bass is coming on. If you want to watch these interviews, if you want in on this, and you're not a member of Real Vision, just click the link in the description below and you can sign up to Real Vision for just $1. With that, let's go back to Ash and Ed.
Thanks, Jack. Welcome, Ed.
Happy Monday to you, Ash.
Happy Monday.
Happy Monday indeed. Market's up.
Yes, it is. Yes, it is. And up across time horizons.
Yes. So, that's what we're going to talk about. There are a lot of different things, ways to look at this. I wanted to piggyback a little bit off of Jack and what he had to say today, and also what he and I talked about on Thursday. The gist of the conversation on Thursday was that we were talking about three market themes: risk on versus risk off, inflation, and we were also talking about the rotation into value over growth. I think the first of the three is the most important one today. We're definitely in risk on mode. And then in addition to that, there is a slight bent towards value over growth in terms of the rotation that we've seen today.
Yeah. Tell us, when you look at that, Ed, what are you thinking about in terms of that rotation, and why do you think it's significant?
Well, the framework that I laid out for Jack was that there were three questions we were asking ourselves. One was how quickly the vaccine can be administered at scale. Two, how much damage will the virus do before that actually happens? And then the third is how much impact will this damage have on the economy in terms of things that will translate into earnings or the lack thereof. And I think that the first, in terms of the Moderna outlook, is very positive. The reason that people like Moderna is, you don't need to have a deep freeze. They talked about 94% effectiveness, which is higher than the number that we got from Pfizer. So all of those things look really good in terms of the ability of this vaccine to bring us back to a new normal that is closer to the old normal.
Yeah, I think that's key. A lot of the things that it comes down to around this vaccine are production capacity and distribution. And the fact that it doesn't have to be in a deep freeze, the Moderna vaccine doesn't have to be in a deep freeze, a major advantage, isn't it?
Yeah, definitely. So I think that when people talk about how quickly the vaccine could be administered at scale, the Moderna news gives us two data points. One is that we have not just one vaccine, but we have two, and likely we'll have many more. I saw that AstraZeneca was talking about the ability to get a vaccine out that will go to other places, and then we also have the fact that there's a deep you won't need a deep freeze, so it's going to be much easier to administer it than it would be otherwise.
Pretty impressive job here by the research and development folks at these pharma companies to be able to scale up a vaccine this quickly.
Yeah, I think the people who have been optimistic about the ability to get a vaccine out, Jay Pulaski comes to mind. Those are the people who are right on the money. We've gotten the news of the vaccine. Now, I think what markets are pricing in is just how quickly can it get done? The vaccine's going to be here, and it's going to be largely effective. The question is how quickly can we administer it, and therefore how much of the old new normal can we unwind and then move towards a new normal that's closer to the life that we had before
Yeah.
The coronavirus hit us.
Yeah, we should also add the efficacy in the field, the duration of immunity. There are definitely some parameters that are sort of hard pharma parameters that we need to establish as well in the field, which is sometimes not always the same as what happens when you test it in clinical trials.
And so I think just taking a step back in terms of how I'm thinking about things, just to make a hard shift.
Yeah.
We're talking about Moderna and Pfizer, and we're talking about news flow affecting sentiment in terms of risk on, risk off. But I think that there's a more a macro lens, that the news flow that we had today only adds to a general sense that we want to have a risk on. I think when you look at the wall of money that's waiting to hit in terms of the amount of money that people have saved up, if you look at the savings rate in the United States, and if you look at the ability for people to consume going forward, there is the potential that there's pent up demand both for asset prices and also for consumption that will buoy the economy. So I think on just a general a flows perspective, there's all of that. And my interview with Michael Howe still keeps coming back into mind. The fact that he said that when you look at central bank largesse in particular, there's this wall of money that emanates from them first and foremost, and that has to be distributed in some capacity into assets. And as a result, asset prices writ large, that includes real estate, that includes financial assets, they all go up on some level that's priced in to 2021 from his analysis. So to me, that's a very interesting concept, especially with the backdrop being very positive on an economic front.
Yeah, we discussed this a little bit on Thursday, of course, but he's very bullish as a result of his analysis, and he's been doing this work for I think 30 some odd years, looking at liquidities, asset prices, and flows. Dating back, as I said, decades. So it's an interesting perspective. Can you give us a little bit more color on why Michael is so bullish?
I think what Michael Howe was saying is that we had a torrent of liquidity that was produced, and it more than made up for the liquidity crisis that we had earlier in the year. And if you look at the differential in terms of the amount of liquidity that's been added to the system and the rise in asset prices, in a general sense, not just financial assets, but we're talking about house prices, et cetera, there's still a lot to be had in terms of a catch up. And he thinks that 2021 is bullish as a result of that. That's his main thesis, is that really at the end of the day, the amount of liquidity overwhelms everything else, and that this will flow through into an increase in asset prices.
Right. So new liquidity comes into the system. It's got to find a home somewhere. It goes into assets one way or another.
Exactly. And it doesn't have to be financial assets. It can be other sorts of assets. And so he's looking for a more sort of macro asset, and he's looking at global liquidity. So that means China, it means the ECB, it means the Bank of Japan, it means banks, the whole kit and caboodle. And that number has gone up markedly, and that should flow through to asset prices as a result. That's his thesis.
Yeah, and talking about asset prices and the run we were on today, I've been playing this little game here. I've got S&P 500, Dow Jones Industrial Average, Nasdaq, and Russell 2000 on a chart, and I'm clicking through the different time horizons. It's all up and to the right, obviously, but when you look from the 5-year, the 2-year, the 1-year, Nasdaq outperforms. When you get to year to date, Nasdaq still outperforms. Click over one more 6-month time horizon, Russell 2000, 3-month, 1 month, 5-day, 1-day, Russell 2000 outperforms.
Yeah, very interesting, actually. I mean, the question is are we on the cusp of a value over growth outperformance? And if so, for how long? I
Yeah.
think that that was actually where I was going next in terms of how I was thinking, because, right before we came on, I was telling you, I was looking at my screen and everything was green except for very few pieces. And the things that were the most, if I can take a look here, that I found the most green were the values. And in particular, I looked at FedEx up 7.63%. I thought that was very interesting. Is that a cyclical stock? You see the likes of Valero Energy up 4.77%, Phillips 66. So to me, that speaks a lot to the fact that we're at a turn. You look at Lyft up 2.44%, a perfect another example. So I think that it's a lot of people are starting to price in the ability for the cyclical stocks to turn. As Jack was saying, it's not just he was talking specifically about the beaten down stocks like the likes of Carnival Cruises and so forth. But I'm saying that in general, value stocks, stocks that were not doing as well in the stay-at-home market, they seem to be doing incredibly well, including FedEx, which was doing well in the stay-at-home market.
Yeah, FedEx, it seems like a stock that wins either way, right? FedEx is as the economy picks up, and also as the if lockdowns continue for whatever reason, you got the stay-at-home play.
Yeah. So I even before the pandemic, I looked at FedEx as a bellwether, especially in terms of the holiday season. If FedEx is not doing well, then that says
Right.
something about what consumer demand is like. Yeah,
Yeah,
but
I should add, we're just talking structurally here, and this is not to do with any idiosyncratic news flow that might be around the stock right now.
right. Yeah, the caveat to everything that we're saying is I said that I was asking three questions: how quickly can the vaccine be administered at scale? And we were very bullish. But the two questions that we haven't answered here, that I think that we need to keep in mind, is how much damage will the virus do beforehand, and then how much impact will that have on the economy? I think at a minimum, what we can say in terms of the amount of damage that the virus is going to do before we have a vaccine that's administered at scale is a lot of damage. From a public health perspective, the numbers that we're seeing are up to 12, 13, 1,400 deaths a day. I believe that number, based on things that I've seen, it will be in the range of 2,000 by the time we hit the Thanksgiving holidays, and then we'll just have to see how quickly that'll be arrested. You see the likes of North Dakota now issuing mask mandates. You see shutdowns increasing, more lockdowns increasing in a lot of different places. That's definitely going to have an effect at the margin. Growth is going to roll over. The more shutdown we have, the more likely it not only rolls over, but goes negative, and we have a double dip the way that you should expect in Europe.
Yeah, it does sort of concern me around the euphoria about the vaccine, that there is definitely going to be this period during which there's going to be this perhaps loosening up of standards, the fatigue, the sense of relief because there's a vaccine. But this virus is still out there; it's still doing a lot of damage. We just finished the passing the November 11th date, 11/11, 11th hour at the 11 minute, and I'm reminded of the guys who died in that war between the time that the armistice was negotiated and the time it was signed, and it's a great tragedy when that happens, obviously.
Yeah, it is a great tragedy. We're just waiting for some sort of vaccine to give us that medical bailout, as I call it. And there's a lot of time between now and then, and every death that happens is unfortunate between now and then. But we're at a crescendo period, and so it's going to be a lot of people who are going to lose their lives before we can administer these vaccines at scale.
Yeah. Absolutely. And it is definitely something to think about.
From just because we're talking about the financial aspects of it, the question then becomes, what does that mean financially? I think that it has two impacts. One is that some companies are going to go to the wall. You can definitely talk about small businesses. You can talk about those places like restaurants, like gyms, like movie theaters that are the subject of a lot of this of the rollbacks. And then the question becomes for everyone else, what does that mean for their earnings going forward? Because we're only talking about a very small percentage. To the degree that you look at things in a positive way, it could be that you're actually, pulling back some of the earnings that should have happened now during the vaccine or before the pre-vaccine period happens later, and so we get an uptick in growth because there's that pent up demand. And so ultimately, the negative impact for the average company might be less than you might otherwise think. It's the ones who lose demand, that the demand that they could have had during this period of time doesn't exist going forward. They can't, do an intertemporal shift from today to tomorrow.
Yeah, you're talking about the shift in the time horizons, and that seems like such a critical point. You spent your career thinking about these kinds of issues around economics. How do you think about the lag? Obviously, there's what you're talking about, the intertemporal shifts, these ideas that time frames don't always align. It seems based on the news today, and we don't know, and it will take more time before we do, that this could be something of a magic bullet, the thing that everyone always seeks. And if we do that, even if you were able to get this vaccine and you knew that it had a near 95% efficacy, it takes time to deploy it. And there are also those time shifts between when, for example, revenue is recognized, when economic activity begins. How do you think about that? How do you begin to get your head around all those issues? Because they're complicated.
Yeah, so I mean, you can think about it in terms of a discounted cash flow model for these companies and the percentage of earnings that happens at various points in time, and then what the discount is from one time to the next. So a perfect example would be, let's say your typical value type of company that 6 to 10% of their earnings is in year one, year 0 to 1, and then you have a bunch of other earnings that are 6 to 10% per year after that, as an example. So if you miss out on earnings and it never comes back, it was ephemeral from the beginning, you're only missing out on 6 to 10%, therefore, of the entire earnings pool that you as a investor in that company are subject to. And so really the shares should only go down by 6 to 10% as a result of that. The second part is how much of that is there any hysteresis there in terms of are we the new normal, is that change from the old normal? Carnival Cruise Lines is the perfect example of that. The new normal is not going to be kind to cruise ships, because we already know the first cruise ship that came back after the whole virus lockdown was reopened, there were coronavirus cases on that ship, and they had to stop again. So that's an industry that's just going to be crushed, not just in year one or year two, but I think there's going to be residual effects over the longer term. And the last thing has to do with growth rates. So when I say 6 to 10%, when you're thinking about the DCF, you're thinking about how much money am I paying for one part of the earnings that I'm getting out of this company. If I'm paying 10 times earnings, then that means that a lot more of the earnings are front loaded to today. So that means that if there's a shift, it's not as problematic for you if there's a backloaded earnings because you are a high growth company. If that money is therefore shifted further back, that's a huge change in terms of how much people are going to get. So let's say it's 100 times earnings, and you expected a certain amount of earnings here today, and that gets shifted back a year or 2 years. Then that's going to have a massive impact on the outcome for the discounted cash flow of that company. I hope that makes sense.
Yeah, that's the beginning of a framework I think that people can start to use to understand how you think about it. By the way, critical jargon alert, hysteresis refers to the effect where you have inputs and outputs within a system and the relationship starts to break down. It's used in economics and physics. But the idea is basically that the old rules don't necessarily apply when one of the variables moves dramatically out of range.
Yeah, and when I was talking about the high growth companies, I'm thinking about the stay-at-home companies, the FANGs, et cetera. So if those companies suddenly, a huge chunk of their earnings that you expected to happen in year 0 to year 1, then therefore gets moved back intertemporally, given the fact that you have huge growth expectations from those companies, that should have a much more meaningful impact on their discounted cash flow valuation. So I think that the jury's still out on this first blush of reaction to the Moderna news. It could well be that we're going to see a much bigger shift to value over growth than we have seen thus far. And so I think that the value over growth paradigm has some legs to it, and it's still not over as yet.
Very interesting. Ed, you also said something earlier that kind of perked up my attention. You were talking about the cash that's sitting on the sidelines. Obviously, we're in a period right now where there's a little bit of political uncertainty here in the U.S. The extent to which you believe there is political uncertainty perhaps depends on your party and how you think about the election. But I was watching a few minutes. It's about 4:30 here as we're finishing up filming. I was watching a few minutes of Joe Biden speaking about the economy, President-elect Joe Biden, by most accounts, at least. And irrespective of the politics, who you voted for, who you voted against, he seemed to be a man who was very much in control of the facts. He seemed to understand the narrative. He seemed to be aware of the challenges the country faces, both economically and on the virus front. To what extent do you think, when there is a political resolution to this, when we have, as we all expect, a peaceful transfer of power, as we have for hundreds of years in this country, to what extent do you foresee some of that cash coming off the sidelines and into this rally?
Yeah, it's hard to say because I'm thinking about something a friend of mine wrote in one of his latest blog posts. A guy by the name of Alan Tonelson. He's a conservative who is a America Firster, and he's backed Trump in the past and likes the move that Trump is making.
Yeah.
And what he had to say, which I think is it's not within the vein of I'm very pro-Trump and this is rigged and all this other stuff. It's more, okay, Biden's coming. What are the constraints in him? This is what he wrote that I found interesting. He said, it's entirely possible that a Biden administration won't be able to undo many of President Trump's signature domestic and foreign policy is at least for years. And it even looks likely if the Senate remains, that the Senate remains Republican. And then he says, think about that issue by issue. And he goes through all of these issues. And what it says to me is that the election outcome, which was much more down the middle, it wasn't a landslide for one group or the other. It might actually mean that the shift that we're going to have from a policy perspective is not going to be great. So to me, that's something that's interesting to be thinking about. And to the degree that Biden might want to make some changes, especially on those issues that the progressives are much more interested in, he would have to wait. He can't use executive orders per se to get that done, and he might not even be able to undo a lot of the things that Trump pushed through. Moreover, if you look at the conservative Democrats, they're not on board with pushing forward a very progressive type of policy framework because many of them almost lost. Abigail Spanberger, as an example, who is someone who was in Virginia and went down to the wire whether or not she could hold on to a seat that she took from Dave Bratt 2 years ago. Those kinds of people, they're when you only have 10 seats or 12 seats differential, they're not going to sign up. and you're not going to be able to get through very progressive legislation. So the long and short of what Alan was saying, and what makes sense to me, is that we're not going to see a massive shift from a policy perspective, irrespective of the fact that Biden is much more of a centrist than he is a progressive.
Yeah. I'm also curious, Alan Tomlinson, someone who's been interested in free trade and industrial decline for a very long time. I'm curious, does this lack of shift that he perceives in the incoming Biden administration, does that bode well for markets? Is he bullish, therefore, as a consequence?
Yeah, I think that I think steady as she goes, if you will, in terms of economic policy. It's much more in terms of tone and foreign policy where you'll see some shifts.
Right.
But in terms of the economic policy, really, there's not going to be a massive shift. And I think, generally speaking, Wall Street's very much in favor of that. Obviously, there are big problems in terms of inequality, healthcare provisioning and things like that, things that the progressives are very interested in. But Wall Street is very much looking for a steady as she goes kind of thing. Biden has said that he's going to provide that, and I think that he is also restricted to a degree to be able to provide that. So the 2020 election may not actually be the election that yields this massive change that people were expecting.
And of course, it's not over yet. We're not going to know the constituency of the Senate and who ultimately controls that body until January 5th at the earliest, because of the runoff elections, multiple 2 Senate races down in Georgia.
That's right. Yeah, and I think that what I found interesting about Alan's analysis is that it's not even dependent upon those 2 races. That even with the margins are so narrow, and there are enough conservatives who are concerned, conservative Democrats who are concerned about the position, that it really restricts the ability to go with very progressive legislation in either the House or the Senate. And just because of that, it means that we're unlikely to see, policy changes that are wide-reaching, at least for the next 2 years until we have the midterms in 2022.
Yeah, very well summed up. Ed, any final thoughts on what you're going to be looking at the next couple of days here?
Yeah, so I think going back to what I was saying about value over growth, I'm going to definitely be looking at, what the tendency is for value stocks to do well, especially banks, because, you really will, if banks do well, what it's saying that is that the loan provisioning that they need going forward to account for losses is going to be less. And I'm also going to be looking for just the general tone of the market going up. Dow 30,000, I think, is within striking distance right now. And who would have thought after a pandemic that we'd be hitting Dow 30,000? But here we are.
It's a good question. Ed, do we have hats?
Yeah, I was looking for a hat, but no, I don't have. Maybe I'll have to get my 20,000 and I'm sure someone on CNBC is going to have a Dow 30,000 hat on.
I don't doubt it for a second. Ed Harrison, thanks for joining us.
You bet.